Welcome to The Explainer, where we break down the big stories behind the headlines. And today, we are diving into one of the most confusing, most fascinating stories in tech right now, the story of Figma. So let's just start with this question, right? Because with Figma, the design software giant, this isn't some abstract business school thought experiment. This is their reality today. And this is really the paradox we have to unpack. It's like there are two different Figmas. On one side, you have this incredible success story, $1 billion in revenue, insane growth, the absolute industry standard. But on the other side, a stock that's in total freefall, completely haunted by the specter of AI and investor panic.
To really get our heads around this, we have to look at both sides of the coin. How did a company become so wildly successful, yet find itself so incredibly vulnerable at the very same time?
You know, this single line from our source material just nails it. It perfectly captures the conflict. Everything we're about to go through stems from this crazy disconnect between how the business is actually doing day to day and what the market thinks is going to happen to it in the future. So let's start with the good stuff. We need to establish just how dominant Figma became. Because before all this fear set in, Figma was, without a doubt, the undisputed king of the hill. I mean, from an operational standpoint, Figma is an absolute clinic. Just look at these numbers. They crossed $1 billion in revenue, growing at 41%. And that 136% net dollar retention, that is just wild. It means their existing customers aren't just sticking around. They're spending 36% more money year after year. That's what an elite business looks like.
And their dominance? It's staggering. This chart really tells the story. Figma owns more of the market than its next 5 competitors, combined. This isn't just about being a market leader. This is about defining the entire category. But see, it goes so much deeper than just sales numbers. Entire companies have built their whole design and development workflows on top of Figma. We're talking design systems, component libraries. They are baked into the very DNA of how modern tech companies build things. The cost to switch away from them is incredibly high. Okay, so if the business is this incredible, unstoppable machine, why on earth has the stock price completely fallen off a cliff? Well, this is where the other story of Figma begins, the one driven by fear. Just let that number sink in for a second. 85%. If you were an investor who bought in at the peak back in August 2025, you've lost almost all of your investment. And that happened in just 7 months. For a company with fundamentals this strong, that's just a catastrophic collapse. And you can see the whole dramatic story right here on this timeline. It rockets up after the IPO, then plummets all the way back down to its initial price, and then just keeps on falling. Now pay close attention to that sharp drop on March 18th. That's a key moment, and we're going to come right back to it. And there it is, that March 18th cliff dive. That was triggered by a product update from Google. This right here is the market's deepest fear made real. A powerful, free competitor coming from a tech giant with basically infinite money and resources. Nothing spooks investors more than that. So, faced with this kind of threat, is Figma just sitting back and taking it? No way. They are fighting back, and they're doing it by making a massive strategic pivot to build a defensive moat around their business. They've basically transformed themselves from a single design tool into this sprawling 8-product platform. Look at this. They're covering the entire pipeline now, from brainstorming with FigJam all the way through to handing off to developers with dev mode and even publishing live websites with sites. And here's the kicker. It's actually working. The number of customers adopting multiple products has jumped from 64% to 76% in just 1 year. This proves their big platform pivot isn't just a theory on a whiteboard. It's getting real traction with customers. This is Figma's huge, high-stakes bet. The whole game is to get customers hooked on so many of their tools, to become so entangled in their workflow, that the idea of ripping Figma out becomes almost impossible. It's a classic strategy to defend your castle. But here's the thing. All of that might not be enough. Because the biggest fight Figma is in isn't against another design tool. It's against a fundamental shift in how design itself gets done. This is the existential threat that has the market so completely terrified. So let's meet the main antagonist in the story, Google Stitch. It's not just another competitor, it's a different species. It's free, It's powered by Google's incredibly powerful Gemini AI, and you can generate designs just by talking to it or by describing a mood.
So the showdown looks pretty stark, right? Figma costs money, Stitch is free. Figma is built for pixel-perfect, professional design work. Stitch is all about getting ideas out fast. But that gap between them is shrinking, and it is very, very hard to compete against free, especially when it's backed by Google's ecosystem.
And it gets even scarier for Figma. Beyond just Google, there's this whole new wave of tools that threaten to make the entire traditional design phase obsolete. These AI native platforms, they don't even try to compete with Figma. They try to skip it entirely, generating working code directly from a text prompt. This is the deeper threat, because it doesn't just offer a cheaper alternative. It asks whether we need a tool like Figma at all. All of this has led to a massive shift in how designers are feeling. Recent surveys show that 70% of designers are now questioning if they should rely on Figma for the long term. That is a huge crisis of confidence coming from their core user base. And that brings us right back to the heart of this entire conflict. Figma is this billion-dollar runaway success story that is, at the exact same time, facing a genuine existential crisis. All of its amazing achievements are being weighed against a future where its core product might just be made obsolete by AI.
And that leaves us with the same billion-dollar question that the entire market is wrestling with right now. Is Figma's battered and bruised stock a once-in-a-generation buying opportunity for a company that's building a resilient platform? Or are we watching in real time the next great cautionary tale of a tech giant that just couldn't outrun